There you go. Point proven. AI is not always perfect. I'm sure our business editor, Charles Pellegrin, would agree with that. He's been covering AI non-stop, haven't you, for the last year? Anyway, you started today, though, weren't you, with a look at the markets, aren't you?
Yeah, far from AI. Let's start with one of the most important variables these days for the markets, and that is obviously the price of oil. The price of a barrel of crude trading higher this Monday after U.S. President Donald Trump rebuffed Iran's latest proposal, calling it, quote, totally unacceptable. The move lowers the likelihood of seeing the Strait of Hormuz open up again anytime soon, a strait through which 20% of the world's supply of oil and natural gas used to flow through. And as a result, we're seeing European shares opening this week's session in mixed territory. The FTSE about 0.2% higher, as it is the home to a number of oil majors benefiting from a higher oil price. And in Asia, meanwhile, we're seeing a mixed picture as well. The Kospi in Seoul breaking records again as its chip maker SK Hynix rose above 10%, riding the AI chip boom. In India, the Nifty 50 index trading lower as the high price of oil is threatening to drag growth lower. Prime Minister Narendra Modi actually urging reduced fuel use on Sunday amid this supply disruption because of the war in the Middle East.
During the COVID-19 pandemic, we worked from home, held online meetings and video conferences. We developed many such arrangements and we also got used to them. Today, the demands of the time are such that we should restart those arrangements.
Well, the rise in oil prices is also leaving its mark on the Chinese economy.
On prices specifically, whether those are wholesale producer prices or consumer prices, they both went up higher than expected in April compared to a year earlier. Producer prices rose 2.8%. After rising 0.5% in the previous month. This amounts to the fastest pace in 4 years. Consumer inflation, meanwhile, climbed to 1.2% in spite of a food price slump, bucking estimates of a 1% drop. This uptick really marks the end of a long stretch of factory deflation. But as domestic consumer demand continues to be weak, those producers are not necessarily transferring those higher production costs on consumers, reducing profits instead.
And amid all the difficulties, a small number of ships, though, are still making it through the Strait of Hormuz.
And for the first time since the war began, a tanker carrying liquefied natural gas from Qatar appears to have successfully crossed the strait over the weekend. According to ship tracking data, the vessel, which you see there, is called the Al Kharaitiyat, I hope I pronounced that right. It loaded at the Ras Laffan export hub in Qatar earlier this month and has listed Pakistan as its next destination. And the data shows it taking the route on the northern edge of the strait, which is controlled by Iran. Global LNG supply has been deeply affected by the closure of the strait, leading to higher prices and even shortages across Asia. And Qatar has been especially hard hit as well, as they produce almost a fifth of the world's global supply of LNG and had until now been unable to ship any out.
Now next, the French President Emmanuel Macron. He is in Kenya for a 3-day visit with a focus on cross-border investment and trade.
Macron getting set to co-host the Africa Forward Summit with his Kenyan counterpart William Ruto Monday evening. The high-level official foray into an Anglophone African country is a first for France, which has historically had closer ties to its former colonies in West Africa. Well, many of those, though, cut ties with Paris. Macron now seeking closer French integration with the growing East African market. Brian Quinn has more.
A warm welcome for Emmanuel Macron as he touched down in Nairobi. The French president is in Kenya for 3 days of diplomacy and trade, wasting no time as he announced more than €1 billion in investment deals on Sunday.
France is leveraging its expertise in sectors critical to Kenya's growth and innovation: energy, digital and transportation infrastructure, which are your priorities.
Among those deals, a €700 million partnership between the Kenyan government and French shipping giant CMA CGM for a new container ship terminal at the port of Mombasa on the Indian Ocean, along with $225 million from French investment firm Meridiam to expand Kenyan wind energy production. But the highlight of Macron's visit is likely to be the two-day Africa Forward Summit. More than 70 French companies have accompanied the president seeking new deals. Paris is looking to Kenya as an opportunity to develop its African presence without the weight of history that hangs over France's former West African colonies like Burkina Faso, Mali, and Niger, from which French forces have withdrawn in recent years following military coups. Kenya is also a crucial entryway into the wider East African market. Western tech giants like Google and Microsoft are present there. French businesses have grown from around 30 companies in 2012 to some 140 today. There is room to grow. Trade between the two countries remains relatively low, at just around €300 million in 2024. France is number 18 on the rank of Kenyan export destinations. As of this year, France is the fifth largest source of foreign investment into Kenya, far behind the United Kingdom.
Charles, thanks very much. Charles Pellegrin with business for us on France 24. Straight to the press